don't think you ever got introduced so many times that year. So maybe I'm going to pass the introduction of yours, and I'm just going to talk about Yaron. So thank you, everybody, for joining us today on this Sunday. And in our panel today, we will try to understand a little bit better the market we're today and the future, or at least how it might look, in the future. I'm gonna introduce you again. Our panelists are two very accomplished and experienced entrepreneurs. Yair Golfiner, that among the companies you founded are ICQ. Everybody still remembers, and the incredible deal, the Recession deal, and AppCard, and Yaron Galai, who founded Quigo and Outbrain. And my first question to you is, how are you?
Excellent.
Okay.
Happy to be here on a Sunday.
That's great. So you've been in technology and innovation for the last 25 years. I don't know if you want to, be reminded of this, that you've been around for, 25 years, still young, but very experienced. And you experienced the heights and lows as founders and CEOs of startups. And I would like to ask you for your perception of the current challenging, I would say, period of time. And what do you think led to where we are? Lower valuations, difficulties of startup raising funds, startups firing employees. Some of them are just being shut down. How did we get here?
My eyes are actually very simple. Greed and hubris.
Oh.
It's very, very simple. That's the main reason. Again, human nature. So I don't think it's anything, in particular to any group. At the end of the day, if you look on, I guess, any bubble like that, you float, you put more oil, at the end it explodes. And that's actually what's happening now. People were way overly optimistic on the change, the speed, and greedy on the outcome. And it
When you say greedy, you mean investors?
I'm saying when you look on,
entrepreneurs
you look on some of the investments where it just doesn't make any sense, even forget about financial sense, any product sense or whatever, there is a need for what they are doing, or there's any way to go and, create return on the money. And you see some of the investors just putting money on because, hey, there's a hype around it. You see what's happening now with FTX, which is it's mind-blowing. The fact that all those amazing investors and zero corporate governance just forget about successful or not successful. Zero corporate governance just doesn't make any sense. Human nature.
But it seems like history repeats itself. I mean, we see it every, I would say, maybe 10 years.
Yeah, I think it's, to expand on what Yael said, I think it's we always go through cycles of fear and greed. We had a long cycle of greed, and now comes the counter cycle of fear. And I think a big part of the greed cycle was the free money, the 0% interest rates, which really made all these wacky investments actually make sense. They're illogical for us as product people. We look at it and say that shouldn't be an investment. But for investor, it made a lot of sense because they could get money for free. So anything that had a chance at yielding something made sense, and that caused overhiring, spending too much on expansion, on growth, on non-profitable growth, and all the things that come in cycles of greed. And now it's going to be a cycle of fear for probably 3, 4, 5 years.
5 years. Okay.
3.
That's really frightening.
Let's be optimistic. 3.
Okay. And my next question might be a little bit harder even. What do you think this is going to end and how we're going to get out of it? You just said 3 to 5 years, but what's going to be, you believe, the way of the world getting out of this, technology crisis? I don't want to say crisis, but like difficult time. Is it going to be the interest rate going down again? Do you think going back to product and to the real fundamentals of healthy companies, making sense valuations? What's going to be the way to get out, and what might be the timeline?
So, predicting the future, as you know,
but that's why you're here,
yes.
not other people.
But
team,
these things, as entrepreneurs, I think we're wired as optimists. But I'd say it's probably going to take longer than any optimist like us would hope for. I think it's just time to flush out all the everything that accumulated, all the barnacles from the past few years. So it's going to be more rounds of layoffs, more FTXs imploding, more Facebook's letting go of lots of employees. And these things just, I think, take time. I think probably, we'll talk about it later probably, but probably the most interesting seeds of interesting future companies are planted right now. But I think it'll be ugly for a while.
So actually,
I'd say 3 years.
I say more, but actually it's actually very interesting. Because if you think about the time now, it's actually a great time to be in a small, young startup. And it's a shitty time to be in a big, non-profitable company. And and it is what it is. If you look on the other recession, the other cycles, it's the same game over and over again. It's going to go, it's going to go, it's going to scale down, shrink. We'll see amazing startup being created, like in the other cycles. Some of them are going to go and become, industry changers, like, the previous cycles. And in, 10 years after, 15 years after, it's going to come again and blow up again, and we'll go. I guess that's the history repeats itself. That's the story, and that's fine.
So you just a little bit touched upon it. So we see in past crisis, the dot-com crash, 2008 financial crisis, and even during COVID, 2022 and 2021 COVID years, we saw some amazing companies that were started, Uber and Airbnb as examples, right after the 2008 crisis. And then we saw companies that are becoming stronger and doing really, really well. And if you're trying to analyze which companies are going to come out not only surviving, but just much stronger, what will be the characteristic of such companies? What's going to be the common denominator for these companies looking at the past and trying to see what are the characteristics that are like common to all of these?
So I did not build a Airbnb or Uber, but I did
start. You still have a chance. This is a crisis, and you're very...
Yeah, so I started my previous company in beginning of 2000, and by March or April, the world had melted down, and investors were telling us this internet thing was a 1999 thing. It's not happening, so go away with any internet stuff. And it took us 4 years. So we raised our actual A round for Quigo in 2004. And then I started my next company in late 2007, where the world was going away again. And so I kind of, I guess, have the pattern of starting during those times. They're generally very difficult times to start anything for whoever's entering it without grit. Like lifestyle, I don't know how to define it, but lifestyle entrepreneurs that would probably start something in 2006 or 2020. These times are tough because investors aren't really very excited to invest, et cetera, et cetera. But I think, as Yael said before, those are the most exciting times for the gritty entrepreneurs to start companies, because a few things come together. A lot of talent is suddenly available and at reasonable prices, which is impossible when the bubbles are bubbly. The second thing is investors aren't investing a lot, but they are investing always in great entrepreneurs and great stories. And they suddenly have more capacity to look at it. They're bored.
And just as a comment, there is still a lot of money to deploy.
Yes.
So there is money in the market to deploy really good startups.
Yeah, it's going to take, again, those few years, those 3, 4, 5 years, for the money to actually flush out through the system, and then it becomes scarcer. But for now, they're sitting on a bunch of money.
So actually, you mentioned an interesting point, which is, lifestyle entrepreneurs, which is actually interesting. Because if you look on it again, it's not about what you are creating, it's about who is creating it. And if you look on those times where, in low times, it's the way I look on it, let me rephrase it. If you look in the last couple of years, whenever I got, someone asked me, should I be an entrepreneur? I said, hey, hell, why not? You're going to get money, you'll raise money, you'll get the same salary that you get as, an employee somewhere, which was not the case, before. And you get holding in a company. Maybe you're lucky. You make some money at the end, successful. If you look on those, tough times, it's actually screening the guys who are starting companies. So my view, it's not really about what they are doing, it's more about who is doing it. And you get higher quality, hardcore entrepreneurs that they don't care about, it's not about, the money is not driven. They're not driven by money.
It's the passion to do something big and
To
interesting.
create.
Excellent. So IVC published recently that the number of new startups started in Israel recently is down 50%.
Great.
So basically what you think are startup that should have not even started are not starting, unlike the past. That this is like my interpretation to a great, right? Or, okay.
Again, it's waves. So who knows what's the right number? If there are too many or too few, I think survival of the fittest. It is a real jungle, and so I think what we're going to see in coming years, I think also as Yair said, is companies that have not been profitable or don't have a path to sustainable profitability. A lot of those companies are probably going to go away, and it's it's painful for anyone that built a company or employees in those companies, but it's probably the right thing to happen. And I think the increased scrutiny now is probably going to improve the quality of companies coming from this batch. Some of the best VCs are actually the 2000, 2003 batch, and then the 2007-8 batch are great VCs.
The question is, what would you say, looking at this like data to people who are thinking to, just starting a startup? Do it or wait?
If he's coming to ask me, you should not start.
Yeah, that's exactly that. I think if...
don't start, period, ever, because
debating,
it's so hard,
if you're
or
debating,
don't start it now?
No. If you're debating it...
No, if you're debating it and you need my advice, don't start.
Yeah.
Okay.
Yeah,
Nothing to do whether it's high time, low time, recession, it doesn't matter.
I'd agree with that. It's it's a tough. It's always I think a tough roller coaster. With the exception of once in a decade lottery tickets like a YouTube or Instagram, which really it's you might as well just go and buy a lottery ticket, which you should not. But with the exception of those once in a decade companies, it's a tough thing to build. And so if there's a lot of debating, certainly in the next couple of years, I'd say that's the answer.
Oh, actually, maybe in other words, if you ask my wife, I'm sick. So I have the virus of starting companies, and I guess whoever doesn't have it, it will not start.
It's about the timing. I mean, people might want to wait for a year or two before they are like launching their startups because it's really a hard time, but you don't think it has to do with timing. It has to do with good ideas and passion to do something.
Once you're obsessed with something, you feel like every minute that's passing is that's it. You're going to read about someone else doing it, and it's gone. So, but again, I'd say for those that have Yael's virus, I think now is a wonderful time.
Wonderful time.
It's like you don't have this virus, you're just. Only.
I contracted it.
I'm getting, I guess, closer to get cured than me. I think after our discussion earlier, he's more sick than me.
Yeah, we were asking if we have the virus for one more in us, and I said yes, and he said, I hope not.
Okay, so just a tip or two to startups that are about any need to raise funds. We know that sales and revenue is the king now, way more than before. Before it was a deck or sometimes just an idea. But if there are some tips when you come and you look to raise funds these days.
It's not about the revenue and what it is important, but it's mainly about the unit economic, which basically means that, and I'm not going to mention any names, but there are tons of companies that were created, and I looked at some, and just the basic number, it will never work. And it's okay to go and lose money, and great companies, look on Amazon. They lost money for I don't know how many years. And they created a huge company, an amazing company. So that's okay, and it's okay to go and lose money, but it's not okay not to have a clear unit economic where it shows when one day in the future, it might take 30 years, but eventually it's going to be created a huge profitable company. And that's the reason, that's main of the reasons that we are where we are, that many companies were created without thinking about it. They were thinking about we can raise more money, bloat, and we're going to find one day to turn it profitable. And it doesn't work like that if the basic stuff doesn't work.
Yeah, I agree. I'd add, so first of all, when we talk about raising capital for startups, it's, I I think usually the basic assumption is venture capital. And I would say venture capital is the correct financing route for a very narrow amount of startups. It's not the only way to raise capital for a startup, and it's certainly not the right one for most companies. There's many different ways. I would say
the well-known story about Quigo, I believe, is the truck companies that, or the infrastructure company.
Plumbing. Well, we'll get to that later. But yeah, I think there are many different ways, and probably one of the best ways, if you can get it, it's not necessarily immediately, but if you have customers funding the business, that's amazing. Then you're a cockroach of entrepreneurship, and good times or bad times can't kill you. But I'd say if you are raising from investors, it's the core of raising capital for early stage startups is not a financial process as much as it's a storytelling process, and it's being able to tell a very concise, focused story of what you are. And I don't disagree.
Actually, I'm sorry for interrupting you, but it's actually, whenever I go and invest or ask entrepreneurs, I know some of the guys over in the room, which industry you think you are? I'm asking you. Actually, wondering.
So I have a great answer on that because I saw once.
I ask every entrepreneur, so I'm wondering, what
so
you can answer.
The line I use, I think it's a great question, but the line I use on that is I once saw an interview with Mark Cuban, who was an internet entrepreneur and then acquired the Dallas Mavericks and went to the first management meeting of the Dallas Mavericks. And he said everyone there has been there for 20 years and they know the company way better than I ever will. And so I said, I'll shut up. But halfway through the meeting, I had to stop them. And what was shocking to him, and he interrupted and said, you all think we're in the business of basketball, but we're in the business of, honey, what do you want to do tonight? And it's so important to understand what business you're in and how to tell the story around that. And I think that was where you're...
Yeah, usually I expect, the answer usually people saying, tech, buy, whatever. And, I'm saying, if you don't understand you're in the show business, you're not going to raise money, you're not going to make money. It's a huge part of the path.
Yeah, I'd call it sales. Every entrepreneur has to be a good salesperson.
Excellent. So what more tips you are able to give to startups that are struggling or think they might struggle in the next 2 to 3 years? Yaron, you're a big fan of The Lean Startup, the book and the concept. It's always right, but perhaps, more relevant now than before.
Yeah. I love Lean Startup. Great book if you haven't read it and thinking of starting a company. You
still have all those copies in your office because
yes,
you used to hand it to everyone. Yes. So Yaron is happy to give you a copy.
And sadly, it came out after I started my company, so I didn't have that to help me. But I think startups generally don't have any reason to exist. So if the idea is good and everyone knows about ideas, a big company should do it with much more resources and more people. The only reason startups do exist is the ability to focus like a maniac on just doing one thing and doing it better. And week over week, 2% improvements. That's what makes that kind of focus is what makes startups succeed. And that's what Lean Startup is about. I think in times like this, it's more important than ever. It's to me, it's looking a year and a half or two into the future, defining what that graph is of growth. What is that metric? And then looking at all the efforts in the company and saying this contributes to my graph. I do it. I do the top 3 things, and I clean out everything else. It's a reason why when we started Outbrain, by the way, for about 5 years, none of us ever went to any conference. We didn't speak at a conference. We didn't show the product at a conference. We just couldn't explain to ourselves how that's the best investment to move that graph.
So I'm gonna again, one is focus, number one, I guess, and the other one, which is very hard, I guess, for it depends if you're a young, stage of company, which is look on each one of your, including yourself, I guess, look at every one of your employees and really look if the best place for them is to be here or not. And if that's the best, which is going to align with the focus, going to align with everything. And if you look on, we're talking about survival, and again, I greatly believe like him in a lean startup, profitable startup, my company is doing, profitable for a long time. And that's the best, go and rely on your customers. And you can actually raise money for customers. By the way, you can raise money, you can advance, you're in a banking, you know exactly, innovative way to go and raise money. You should not rely on. The last, guys you should rely on are your investors.
Yeah, I think a good general tip is every shekel you spend, think of it as the last one. I can tell you, the last ones you spend are so incredibly painful. We spoke before the session about a story from the past where I actually had to save the 15 shekels at the time because we were in Israel on the paper in the fax because I was trying to buy like another day of life for the company. So if you're in that state of mind of every expense, think of it like the
Thank God for the email.
Yeah.
No need to use fax anymore.
Yes.
So I would like to conclude with some maybe encouragement for people who work for startup or lead startups, and for you to tell a story or two from your past career, of a point in time where things didn't look so well, and it seems maybe the startup is about to, this is the end, and then something happened, and then you kept going and got to the huge success both of you got to in the past and also today.
So actually, I'm going to reach, another story from ICQ, which I guess I spoke about them, in other cases. And people are not, familiar with a second company called Dotomi. So actually, that's interesting. Dotomi, what they did, what we started to do was basically kind of opt-in advertisement. I'm not going to deal into, too much into it. And I would say a couple of years into it, after raising quite a lot of money, and basically getting to, it didn't work. Actually worked very well in Israel, in the pilot we did, came to the US, didn't really work, and we got to a place where we lost $1 million a month. Almost no revenue. We couldn't figure it out. Again, I'm not going to get into my issue with my board and so on, but we got into it. And then we did this one tiny change. And we were basically about to close the company. We ran out of money, nothing. We went and we decided to do one change, basically changing from opt-in to opt-out, remarketing. That's how it's all got started. And in a month, everything changed.
What was the change?
6 years. Basically, if you look at the company, Dotomi was six first years, zero revenue, up to $1 million, a loss, in a month. We did a change. We changed the product. We pivoted the product from opt-in to opt-out, changing 4 years later, $100 million, $97 million in revenue, $30 million in EBITDA. But it's one tiny change. And we were very close to close. We went out, and actually a very interesting story around it. We went out to raise money. We spoke, I still have the names, 97 investors, 2 term sheets. One in a shitty terms that's basically take over the term, and the other term in a very different terms because the guy knew me for many years and a good friend. It was his best investment. And 5 years later, the company was acquired, but yeah.
Cool. I'll try to. It's going to be hard to top that, but since you mentioned our investors before, I'll tell that story. So we started Quigo, my previous company, in April of 2000 is when we incorporated. The worst day in the history of humanity to start a company. It was basically the day after Alan Greenspan, I think, said this is all a bubble and it's going to collapse. And we raised our A round 4 years later in 2004. So during those 4 years, we had a lot of wacky war stories, including raising money with shooting, so actual war story. But so I raised from all kinds of weird directions, and one of them, which our investors I really owe a lot to, were, I don't know how I got to them, but I got to Afula, to a family with a plumbing company called Chasson Instalatia. And we couldn't get any proper investor in Israel to invest, no VCs or any real investor. And I got to Chasson Instalatia, and somehow we did a whole round for Quigo of $16,000. And the reason it's that specific number is that was payroll. So I could kick the can for a month until I had to refigure out what to do. So they did the $16,000 investment. I thought I'm taking bread off their table. So for the next 7 years, I did not talk to them. We didn't call. We were very bad with, we were always going out of business. So why talk to anyone? Then after 7 years, we finally got to the point where we sold the company to AOL, a $400 million deal, and we signed the deal, but there were about 2 weeks before it was announced in the press. And so during those 2 weeks, we said each one of us will call the investors and tell them the good news that they're going to hear soon. So I start this call with Chasson. They were two brothers. I got to the wrong brother, I guess. And I think this is going to be the best #1 phone call in my life because they invested $16,000 and I think they made $2.5 million back. Not a bad investment. Turned out to be the worst call ever. And about 15 minutes in, they forgot about it. They told their accountant, we haven't heard from them, it's gone. So they totally forgot about it. And he thought this was like a Nigerian scam of, you give me the bank account, and I'll send you $2.5 million.
This is a great, great story. So we would love you to ask questions if you have questions. Okay. Can anyone? Oh.
What is the opt-in, opt-out change? I want to ask, you mentioned the opt-in, opt-out change. What is this exactly?
We basically ask, we started by asking people to go and do opt-in. So they'll be able to go and, choose the advertisers they want to get advertising from. And we change it to what we call remarketing, retargeting. So you go to one website, you don't buy these spam banners chase you. I cannot say I'm so proud of it, but anyhow, that's what it ended up being. So basically, people needed to opt out from getting the personalized advertisements and opt in to get them.
Yes.
Is the SaaS metrics number still here and stay? In other words, in 2000 we saw maybe
Rule of 40?
the rule of 40.
Yeah.
Many good companies but did not have any revenue. Now we have many good companies with revenue but without profit. So is this maybe a little bit different than 2000 or is it again 2000 kind of situation?
You can answer, but just to explain. So Rule of 40 is generally a rule for companies in SaaS, which is the combination of your growth rate and your EBITDA margin should be 40 or over. And so it's a trade-off. If you're more profitable, then you can afford to be less growy and vice versa. I think it's a generally good rule where in times like this, in that 40, kind of try to push towards profitability because you don't, during these couple of years, you don't want to rely on having to go to investors, any form of investors. You'll still be able to raise if you're a good company. If you're profitable, you'll be able to raise. But having to be with your back to the wall and beg for your company's life from investors, these are not the good years to be in that position.
More questions? Okay, last question.
Twitter and Elon Musk.
It's wacky, and give us all the popcorn, and it'll be amazing. I actually think it's going to work out somehow. I think first of all, as I said, they're a great example of a result of the last 10 years of free money, and I think it was bloated to a point where you probably don't need 7,000 people to maintain a website. So I think cutting those costs is going to be a useful thing. Again, they were said to be burning $3 or $4 million a day, which is unsustainable. So I think making it sustainable is going to work. I think part of what he's doing is marketing, and so when everyone is getting upset at Elon is ruining the world and all that, he's just sitting around and saying, my marketing is working, because now all the discussion is happening on Twitter. CNN is getting annoyed at Twitter, but they're annoyed at Twitter, so people are going there. I think he's generally just creating a new startup ethos where in a few years you'll have the people that rebuilt Twitter. There's an ethos there, and probably they're going to build some stuff. So I'm up to companies that have that strong of network effects don't die that easily. It's very difficult to kill a network effect company.
Yeah. You couldn't say it. I couldn't say it better.
Okay, Yaron Galai, the incredible Yaron Galai, and the incredible Yair Goldfinger. Thank you so much.
Thanks.